Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it, and basically we are covering the Banking Regulation Act, right? Banking Regulation Act 1949. All right. Basically we are covering the various you can say the provisions provided within the act. Okay. And right now, in this lecture, we are going to finish the Banking Regulation Act. It is the final lecture for the Banking Regulation Act, and the provisions which we are going to cover in this lecture are penalties and offenses and more details on the Banking Regulation Act 1949. Basically, it is about the recent, or you can say a very latest amendment of 2020 into the Banking Regulation Act. All right. So I hope that you have revised the previous lecture before you have come for this lecture. Is it for your own benefit? All right. So let's start. So basically, the first penalty is for the penalty for violations. Okay. Penalties may include fines, imprisonment, or both. Severity of penalties depend on the nature and gravity of the violation. Penalties are meant to serve as a deterrent, discouraging individuals and banks from committing offenses and non-compliance. So basically, it means that if some bank, suppose we have the bank XYZ, okay, in some cases, if the XYZ is not doing or operating as per the standards provided into the Banking Regulation Act 1949, so it means that it could attract a penalty, and this penalty will be known as the penalty for violation because the XYZ is accused of violating the rules and regulations provided within the act. All right, this could provide them, you can say, cash penalty, okay, or second is the imprisonment. Okay, it means that whether the XYZ has to pay the cash to the Reserve Bank of India as a payment of penalty, or its board of directors must be go to the imprisonment. Okay, third case is that both. It means that they have to pay the cash penalty as well as they have to visit the imprisonments. All right, this is the first provision. Now, the second is the unauthorized banking business. Engaging in banking activities without the necessary licenses or approvals is a serious offense. Unauthorized entities and individuals conducting banking activities can deceive the public and pose risk to depositors. All right. Basically, we had learned that if any bank want to operate in India, they must have a license, right? And the license will be provided to them after you can say assessing the physical conditions of the bank and as well as their capability to operate in the Indian economy. Okay, these factors have to be considered while promoting the license to them. It is the first case. Second thing is that approvals. Okay, it means that apart from doing a normal banking business, it means accepting deposit and granting loans. If the bank wants to get involved in some other activities as well, like they want to involve in investments, like they want to involve in security market, share market, also they want to expand themselves outside the country. If these are the cases, still the bank is required to get a necessary approvals from the RBI, Reserve Bank of India. Okay, failing to this means that the particular bank has committed an offense and this is punishable. All right, suppose if the XYZ bank is operating without having a license, or they are expanding themselves to the outer countries without getting the approval from the Reserve Bank of India, both the cases are basically the violation of the fact. So in these cases they may have to pay the penalty. All right, thereafter, false statement. Making false statement in financial reports, application or documents submitted to regulatory authorities can undermine the transparency and integrity of the banking system. It means that if you remember, I had told you about the audit and inspection provision, right? They are basically conducted for two things. First is financial stability of the bank. It means that whether they are getting right or wrong. And second is framing out the current picture. Okay. For these two main purposes, the audit and inspection organize. All right. So the audit and inspection basically organize on two bases. The first is the internal audit. Second is the external audit. Okay, they are two types of audit basically conducted in the banks. Okay, so suppose during the internal audit, the bank had claimed that they had assets of worth rupees 100 crores. Okay, and they had liabilities of worth rupees 60 crores. Okay, it means that the financial health of that bank is good because they had more than what they didn't. All right, they had assets more than their liabilities, so they are good. But when the external audit was organized by the RBI or the statutory auditors, it is find out that instead of having the asset of 100 crores, they had the liability of 100 crores. And assets of only 60 crores. All right, it means that they had the bad financial health. All right, this is called the false statement. Got it? So if any bank doing this, it may have to pay the penalty. Okay. Misrepresentations can harm the interests of stakeholders and the general public because we are not getting the clear picture. We are getting the picture that they having the assets of 100 crores and liability of 60 crores. Okay. So maybe as a stakeholder, I will invest it. Maybe as a general public, I will open an account with them. I will take their services. But the reality is they are suffering a heavy losses. It means they have the liability of 100 crores and asset for only 60 crores. Okay, this is the clear picture. So if we go with the false picture represented by the bank, we will have to suffer a losses. Okay, so that's why the false statements are prohibited. Non-compliance with regulatory guidelines. Non-compliance with regulatory guidelines such as those related to reserve requirements, lending practice, and risk management can lead to regulatory actions including penalties and restrictions. Okay, basically I had told you the Reserve Bank of India is the regulatory authority, right? And they are the one who makes the policies and they are the one who ensure the implementation. Okay, so if any bank who is following the non-compliance, it means who is practicing its own and not following the regulatory guidelines provided by the Reserve Bank of India in the cases of reserve requirements, it means getting the CRR or the SLR, lending practices, it means granting the loans, risk management, it means that acquiring a property, participating in the commodity market, which is prohibited under section 8 and 9. Okay, then they could lead to the regulatory actions. If RBI finds out that the bank is doing such kind of activities which could harm the interests of the economy as well as the banking system, then the RBI could impose the penalties and the restrictions over the bank's business. Okay. Compliance with these guidelines is essential to maintain the stability and soundness of the banking sector because RBI issued these guidelines after assessing various factors regarding the economy. Okay. Thereafter, insider trading. Insider trading involving non-public information can distort security markets, erode investors' confidence, and harm the reputation of the banking industry. It means that, suppose if this is the bank XYZ, okay, so it will have two type of information: general information and secret information. Okay, general information is information which could be published in the public. Okay, but the secret information is the information which is generally kept by the banks with themselves. Okay, so insider trading means if someone getting the access to the secret information from any member of the bank, because inside member could leak this information, they having the access to it, then it will be the part of insider trading, and this is prohibited. Okay, because other stakeholders and the other shareholders who are also attached with the bank, they have to work according the general information provided to them. But if someone of the shareholder or stakeholder getting a special information which is prohibited to be published in the public, it means that it is harming the interest of other ones. All right, so that's why it is banned. Regulatory authorities monitor and investigate insider trading to ensure market integrity. It means that everyone should get an equal chance in the market. There should be no special information sharing, and also there should be no special treatment to anyone. All right. Thereafter, the fraud and embezzlement. Fraudulent activities and embezzlement within banks can lead to financial losses and erode trust in the banking system. It means that if somehow the bank XYZ involved in the any fraud or scam, or you can say any top management member or any senior executive of XYZ involved in the cases of embezzlement, it means that their working record will be damaged. Okay, and their image in the market will also be affected. Leading to this, the investors and the, you can say, the stakeholders of the XYZ, their trust will also eroded because right now the bank has been acquitted for something wrong. All right, this provision is also provided to impose the penalties. Offenses related to fraud and embezzlement are subject to criminal prosecution. It means that if anyone directly or indirectly from XYZ or any bank involved in the activities of fraud and embezzlement, then the serious consequences could be attracted to them. All right. Thereafter, misrepresentation of the bank's financial health. Okay. About it, we had already discussed that misrepresentation of bank's financial health can mislead investors, depositors, and the regulators. Okay. Because if we take the example of assets of 100 crores, liabilities of 60 crores. Okay, if this is the scenario, all right, then what generally happen? Even the stakeholder, even the depositor, even the regulator, all will see the bank's health is good. But when we go down, we find out the actual situation is that assets is only for the 60 crores and the liabilities stands for 100 crores. It means that the bank is suffering a heavy losses. Okay, so that's why misrepresentation of the bank's financial health is prohibited, because it could mislead the investor, depositor, and the regulators. All right. Accurate financial reporting is essential for maintaining trust in the banking sector. It means instead of execrate the bank's assets and the change in the liabilities, the bank should provide their actual information to the regulatory authorities, to the depositors, and to the investors to maintain the integrity and also allowing the authorities to help them. Why? Because if the Reserve Bank of India will inform that the XYZ is suffering the losses, then only RBI could help them, right? But if XYZ is not showing their actual condition to RBI or any other authorities, then authorities won't be able to help them because we didn't have any clear picture about them. Okay, so remember this point also. Thereafter, failure to maintain records. To maintain accurate and complete records is crucial for transparency, regulatory oversight, and risk management. It means that whatever the audit findings will be, whatever the inspection findings will be, and whatever the working, day to day working, and whatever the previous targets, achievements, all these kind of things should be maintained properly. Okay, it is to promote the transparency and also to provide the accurate data about the regulatory oversight so that the agencies could form out like what is currently happening with them, all right, and also to took the measures of risk management. Non-compliance with record keeping requirements can result in penalties and regulatory actions. It means that if the Reserve Bank of India finds out that the particular bank is not maintaining its record on the overall basis or on the regular basis, it means that the RBI could impose the penalties and the regulatory actions over them. Thereafter, default in repayment of deposits. Failing to meet deposit repayment obligations can lead to depositor distress and impact the bank's reputation. It means that, suppose this is the bank called XYZ. Okay, this is the person who deposit rupees 10 lakhs with the XYZ deposit. Okay, and the XYZ lend out the loan to this person for rupees 10 lakh. Okay, and after some time, the person who had deposited the money reached the XYZ and asked for the withdrawal. But we know that the XYZ had granted the loan to another person of the full amount. It means that right now the XYZ will not be in a condition to repay the loan to him, right? Sorry, to repay the deposit to him. So it will consider as a default in repayment of deposit. It means that the bank is not able to repay the amount which had been taken from this person. Okay, and this could lead to the distress and impact the bank's reputation. The act includes provisions to ensure that depositors' interests are protected and banks meet their obligation. It means that the BRA Act 1949 basically provides the concept of CRR and the SLR and other banking reserves as well to ensure that the bank should maintain a particular reserve at every point of time to meet the depositors' requirement. All right. Thereafter, non-compliance with the CRR and the SLR. Non-compliance with cash reserve ratio and the statutory liquidity ratio requirements can disrupt the monetary and the financial system. Because we had discussed in the monetary policy, CRR and the SLR are the major tools to control the money supply. And we had discussed that how the CRR and the SLR controls the money. Already we had discussed it. Okay, so it is mandatory for the banks to maintain the CRR and the SLR records. And if they are not doing this, it means penalties and regulatory actions are enforced to ensure banks adhere to these reserve requirements. All right, let's move ahead. Non-cooperation with the RBI inspection. Okay, cooperation with RBI inspection is vital for the effective regulation and oversight of the banks. Non-cooperation can hinder regulatory authorities' ability to assess a bank's financial health and compliance with regulation. It means that this is the bank XYZ. Okay, and this is the Reserve Bank of India. Okay. One day, the Reserve Bank of India sent their inspection official teams to XYZ to assess that whether the things are going well in the XYZ. And the XYZ started hiding records from the inspection team. It means that they are not cooperating with the RBI inspection. They are not showing them the documents and files so that the inspection team could formulate what is exactly going with the XYZ. Okay, that's why it comes under the provision of this thing. And this could also impose the penalties if the inspection team finds out that the bank is not showing the all records or accurate records. Okay, thereafter, prompt corrective action, which is also known as PCA, is a measure with the Reserve Bank of India can take address capital adequacy and risk management concern. Okay, may include restrictions on lending, dividend payments, and management changes to address the bank's financial health. It means that if the RBI finds out that something is going wrong with the bank, then the RBI could take the PCA, which is the prompt corrective action, to correct the situation prevailed with the particular bank. It may include restrictions on lending, dividend payments, and management changes to address the bank's financial health. All right. Thereafter, preservation of records and documents. It's like maintaining the records. Banks are required to maintain records and documents for a specified period to facilitate regulatory scrutiny, audits, and investigation. Okay. Failure to preserve these records can hinder regulatory oversight and result in penalties. It means that the banks are required to maintain all these things. Administrative penalties allow regulatory authorities to address specified violations without resorting to criminal prosecution. It means that if the RBI or the regulatory authority not considering an offense as an offense of criminal prosecution, then the penalties which would be imposed will be known as the administrative penalties. Okay. These penalties are designed to encourage banks to correct compliance issues promptly and align with regulatory standards. So, the penalties and offences provisions within the BRA Act 1949 serve as the foundation for maintaining the integrity and the stability of banking sector. They ensure accountability, transparency, and adherence to regulatory standards, ultimately safeguarding the interest of depositors, investors, and the broader financial system. Okay, so here we had finished the provision for penalty and offenses under the BRA. All right, now let's have a talk about the more details on the Banking Regulation Act 1949. All right, so let's move ahead. So right now we have the Banking Regulation Amendment 2020. Okay, introduce several provisions to regulate cooperative banks similar to commercial banks. Here are the key provisions of the amendments. Okay, basically commercial banks are having the proper structure to operate, and these are divided into the public and the private on the basis of ownership. Okay, about it we will have a detailed discussion in the upcoming lecture. Till then, just remember this thing. Whereas in the cooperative banks, group of individuals formed a bank by contributing the certain amount on regular basis. Okay, suppose there are 20 individuals. They came together and they had contributed rupees 1 lakhs each. So total amount will be 20 lakhs. Okay. So this 20 lakhs will be the capital of cooperative bank. Got it? That's how the cooperative banks operate. We will also have a detailed discussion over this cooperative banks in the upcoming lecture. Till then, just remember that the Banking Regulation Act Amendment 2020 basically done for the cooperative banks. Regulation by RBI, it was provided into the amendment. Cooperative banks are now regulated by the Reserve Bank of India on par with commercial banks, not subject to any exception, ensuring strict oversight and supervision. So basically, nearly about 1967, the cooperative banks get indulged in the Banking Regulation Act 1949. Okay, but they had some exceptions. Okay, and also they had some relaxation in control of the banks by the Reserve Bank of India. Okay, but after the year of 2020, after the year of 2020, they had also placed under the Reserve Bank of India. It means that they are now to be controlled by the Reserve Bank of India, as the Reserve Bank of India controls the commercial banks, and they are no longer subject to any exceptions as they had since 1967 to 2020. All their previous privileges will be revoked. All right. Second provision was for the raising capital. Okay. Cooperative banks are now allowed to raise capital or raise equity or unsecured debt capital from the public subject to prior approval from the Reserve Bank of India. It means that suppose if the bank was XYZ, okay, and it was the cooperative bank. So prior to 2020, basically, they were allowed to raise the equity shares or the unsecured debt from the public. They no longer required to get the approval from the Reserve Bank of India. But after of the amendment of 2020, if XYZ again want to raise the equity or the unsecured debt capital from the public, they are not allowed to do it directly. They had to obtain permission or approval from the Reserve Bank of India. If the RBI approves them, then they could do it. If the RBI denies the approval, this will be denied. Okay. This move aims to enhance their financial stability and increase their capacity to meet the banking needs of customers. Okay. Second is the qualification for management. RBI has authority to prescribe qualifications for the appointment and removal of the chairman and other management personnel of the cooperative banks, like they do in the commercial banks. Now they could prescribe the qualification for the management and the removal for the management as per the commercial banks. Provision ensures that the qualified and competent individuals lead this institution. Because of the growing nature of the cooperative bank, and as more and more people are connected with the cooperative bank, it is become very essential that these banks must be governed properly and must be operated properly. That's why the rules and regulations for the management set up by the Reserve Bank of India. All right. Reconstitution of the board of directors. To ensure the presence of a sufficient number of qualified members on the board of directors, the RBI has the power to reconstitute the board. Okay, it means that suppose Mr. A, B, C, and D, these were selected as a board of directors for the cooperative bank name XYZ Bank. Okay, but at any point of time, the Reserve Bank of India finds that the ABC are not suitable or not enough for the board of directors. So the RBI could reconstitute the board like they elected A, F, and D. Now these are the board of directors. It means that there is a reconstitution of the board of directors. RBI could even change or make the new board for the cooperative banks if it finds that the present board of directors are not capable or not so qualified to be elected as a director. Okay. Additionally, in consultation with the state government, RBI can supersede the board of directors if deemed necessary for the smooth functioning of the cooperative bank. It means that if the XYZ bank operating in state A, okay, and then the Reserve Bank of India finds out that the XYZ's board of directors are not doing as per the requirements, even after the reconstitution or any other thing. Thereafter, the RBI has to consult the thing with the state government of state A, and once the things are confirmed, thereafter, the RBI could supersede the board of directors. It means right now, all the decisions and all the things with the XYZ bank will have to be duly checked with the Reserve Bank of India. Because right now, the Reserve Bank of India supersedes the board of directors. Okay, but this could be only done after the consultation with the state government. All right, reconstruction and amalgamation. RBI has been empowered to formulate schemes for the reconstruction or amalgamation of the cooperative banks without imposing a moratorium. All right, this enables the RBI to take timely corrective actions to address issues and enhance the financial health of these banks. These provisions were introduced to strengthen the governance, operations, and the financial viability of cooperative banks, ensuring greater transparency, accountability, and stability in the cooperative sector. Okay, so this is the part 1 of 2020 amendment. The amendment empowers the Reserve Bank of India to play a more active role in overseeing and regulating cooperative banks, thereby promoting confidence among depositors and fostering a stable and robust banking system. Because right now, the depositors are aware that the Reserve Bank of India is basically handling the situation with the cooperative banks. Okay, so they could easily build the trust. This is the part B. Critics of Regulation, Banking Regulation Amendment Act 2020. Okay, right now we have seen the provisions. Now we have to consider what are the you can say limitations or what are the negative impacts or critics of the amendment. Okay, the first is increased supervisory burden. Okay, with the extensions of RBI supervisory authority to urban cooperative banks, district or central cooperative banks, and state cooperative banks, the workload or RBI has significantly increased because already the RBI has to supervise various other banks. Okay, right now they had they have to also supervise the cooperative banks. Okay, it means that now RBI requires an additional workforce to get the workload. Okay, so it means that there is a workload burden on the RBI as well. This expansion of regulatory oversight could pose challenges in effectively monitoring and regulating a large number of banks. Okay, because RBI also having the limited resources. Okay, and when the RBI has to employ the resources at various places, there might be a situation that the effectiveness and the effectively monitoring and the regulating must be hindered. Okay, thereafter, federalism concerns. Act raises concerns regarding federalism as it deals with the regulations of cooperative banks, falls under the union list, while the incorporation regulation and winding up of cooperative societies come under the state list. It means that regulation of the cooperative banks are the part of central government, Bu- but their establishment and their winding up are the part of state government. Okay, it means that within a single entity there are the two governments to be cooperated. Okay, so there may be the situation when the dispute arises. Okay, it means that because the central government has the power, so they are saying something else. Okay, because the state government also having the interest, so they are claiming something else. All right, so this kind of situation could be formed. There is nothing right or wrong in it. Okay, that's why this division of powers could lead to the conflicts between the central and state government over regulatory authorities. Okay, so this is also the concern of 2020 amendment. Capital provisions and cooperative principles. The Act introduced provisions on raising capital for cooperative banks, which may contradict the principle of cooperative societies. Okay, basically, member of cooperative society will be member of cooperative bank. Okay, that was the concept. It means that 20 people who contributed 20 lakhs were the part of cooperative society. And because they had cooperated the amount to form a bank, that's why they are the member of cooperative bank also. Okay, this is the first thing, and this is the principle of cooperative society. But if the cooperative banks are allowed to get the money from general people also, it means that someone outside from these 20 people is now investing or connecting himself with the bank. Okay, he is also a customer. In such a situation, he is not a part of the society, but he is a part of cooperative banks. It means both the principles are getting contradicted. This is also the critics of this act. Okay, cooperative societies traditionally raise capital from their members, as I have told you, and the amendment's lack of clarity on raising equity capital from the public may create ambiguity and challenges in adhering to the cooperative principle. Like, as we had discussed, if the XYZ who had the money contributed by 20 peoples and these 20 peoples are the part of one cooperative society. Okay, but if we had five people who had invested rupees 1 lakhs also, it means now rupees 5 lakhs has been raised as a capital from the general public. So now this is the ambiguity, or you can say the confusion amongst the members as well as in the banking society, that whether these people should be called as a part of the society or not, because they are only investing through the shares and you can say through the debentures and other things available to them. They are not actively participated in the cooperative society. Okay, so this is the basic contradiction, and this is also the critics of amendment. All right, addressing these issues is crucial to ensure the smooth implementation of the BRA Amendment Act 2020 and to strike a balance between strengthening regulatory oversight and preserving the cooperative nature of these banks. Considerations for cooperative principles, collaborative efforts between the central and state governments, and clarification on capital raising mechanisms are essential to promote a healthy and sustainable cooperative banking sector in India. Okay, so students, basically in this lecture, we had done with the BRA 1949. All the provisions we had discussed in detail. I hope that you have revised them all. You have got a clear-cut picture of the scenario. In the next lecture, we will start with the types of banks. We will have a detailed discussion on them. Till then, just revise this lecture, revise the previous lecture of the BRA which we had discussed, and be ready for the another lecture. With this note, let's end this lecture and thank you.